Today's a classic example of silly season, crazy, with most of the indices up maybe 2.5%. No reason for that, just a very thin market. Hello, traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday update for Tuesday, the 20th of December. Well, we've talked about silly season before. It runs from the 15th of December to the 7th of January, and there are 5 key silly season recommendations I have for you today. 1, enjoy time with your family and friends. You can find the other 4 on our website. But we're also going to be looking at 3 ETFs to watch in 2012 today. These are core ETFs that we expect to have big moves in 2012. We're also going to be looking at 3 stocks having big moves today and why they're important and why you should look at them. Now let's go to the one truth that we count on every day here at Market Club, and that is our trade triangle technology. So here we are. We're looking at a stock. It's Pulte. And Pulte is plus 100. Now, Pulte is a home builder. And as you can see, we have our monthly trade triangle right here at 611. Market's currently trading at 606. And you see how these things tend to come in beforehand. But look, Pulte has come down a great deal. Let's just scope this out just a little bit, maybe the last couple of years, and just put our monthly signals in. And you can see here's our first monthly signal. Pulte was in trouble back here on the 25th of May, 2010, and you can see from 1034, we just got a signal on the monthly here at 611 on December 1st. So all the time we talk about trading these markets because they're not buy and hold any markets anymore, but we also use our weeklies. And let me scope this in just a little bit closer so you can get an idea of what we're talking about. And that is, here's a weekly signal. The major trend is down. So there's a short at 7.09, cover the short here at 4.92, get short again here at 4.04, you cover that at 4.55, that'd be a small loss, but you would have made a huge profit here, and you're pretty much out of the market during this rally. Now, this is the first trend change at 6.11 that you'd be interested in, so you're interested in buying the market now and trading Pulte from the long side. Having said all that, I just want to remind you, it's the silly season. These are very thin, unpredictable markets. Because of the thinness in the markets, a small order or a small piece of news can gyrate the markets very quickly. This is perhaps more so this year than any other year I've seen it, because this has been a very tough year in terms of Europe wagging the dog's tail, so to speak, and the dog has been America. The economy is not so great, it's not so bad, but compared to Europe, there's lots of problems there. So this market that's up today could be down tomorrow, and that's all to do with the silly season. So let's go to our first market. That's the S&P 500. You see a plus 70. That's an emerging trend based on our trade triangles. And the one thing I want to share with you today, even though we have a big update today that's up 2.5%, you could look at our triangles and also our trend line. You can easily draw from these levels right here, which comes in around about the 258 level. I don't think this market's going to go up from those levels. In fact, I think it'll be very hard pressed to see the market go up from there. But the other thing to look at, in my opinion, is where this market is for the year. I mean, most of the equity markets are down around the world. If in the Americas we're up a little bit in the we're up a little bit in the Dow, but the NASDAQ and the S&P are all pretty much down for the year so far. Will they get to even for the year? It really doesn't matter, because if you're just trading the year now to try to make up your year, you're too late already. Why don't you wait until 2012 and get some real opportunities? If you remember, in 2009, the market made its lows in the first quarter of 2009. Then the market took off, and that's what we're waiting for. We want to see a liquid market. But you could argue, and I'm going to just draw this with our telestrator to show you what potentially could be happening with this market, and we'll be on top of it if, in fact, this is the case. So as we have our indicators, let me just take this off the screen. You can see, you could argue that this is a potential. This would be the right shoulder. This is the left shoulder. And this would be the head. So that's the formation that you're looking at, like that. Now the key is this would be the neckline, of course. This would be the neckline. This is a head and shoulders base. The market has to go really over here, over this level here. And if you're looking at that level there, you're looking at the high of around 1266. So it has to go over 1266. If it closes over 1266, you could argue that it has made a base, and we're going to challenge and go higher in this market over 1300, over the 1340 area. So you'd measure simply from 1260 down to 1160. That's 100 points. Add that up. That's 1360. So you'll be looking somewhere at this region here, 1360. But that has to happen. I'm not sure it's going to happen, but we'll have to watch the market very carefully. But remember, this is the silly season, and you really want to be careful with your money during this time. It's too easy to lose money on very thinly traded markets. I recommend just waiting until the new year after the 7th of January and then looking at the market. So let's go to our next market, and that's going to be the silver market. Again, minus 90, a strong trend. I'm not going to spend a lot of time on that today. It's pretty much the same. The gold market's plus 55, even despite today's move of 1.11%. We got up as high as 1617. Let's look at that chart right now. But that market really hasn't gotten too far. This is not a particularly bullish formation. I'd like to see some retest of this 1550 area before I got excited about the long side of this market. Now, longer term, we do have our monthly trade triangle, which is still positive from 1430, still very much in the positive mode. The short term, or the intermediate term, is short from 1681, and the short term daily is long from 1604. So you've got this mixed picture, which is 55, a trading range. If you're an intermediate term trader, you shouldn't be in this market right now. There's no reason to be in the market. If you're a longer term trader, of course, you'll be following our long-term monthly trade triangles, which is still very, very positive on this market. But this formation does not look like a positive move on the upside, in my opinion. Let's go to copper. We've said this time and time again with the copper market, and that is the copper market tends to mimic what the equity markets are doing, and today is no different. You had an up day in the equity markets, and you have an up day in copper. However, you have a plus 50, which is a trading range market, and look at this market for the last 6 days. Up, down, down, up, down, up. It just doesn't, no trend whatsoever. This is obviously support, the 320 level, and it needs to move under that to get the bear market in full stride again. Let's just leave that and just watch that market for the time being. Next market's going to be crude oil. If you remember, crude oil has had an amazing turnaround from the highs, double top. We talked about that before, the pivot point. Today's rally is obviously a strong rally up to the upside. We talked about the doji points yesterday. These two lines of doji means there's a perfect balance between buyers and sellers. Sometimes that's a reversal. And today's up move was just a lot of short people getting pulled out of the market who are short this market. It doesn't mean to say the trend has reversed. In fact, you have a perfect plus 55 indicating a trading range again. So there you have it. Now, it's possible we could see this market trade down to lower levels, but we want to see this market do a little more work before we get excited either shorting this market or getting long. It's just too thinly traded right now and too choppy to get excited about. So next market's going to be the dollar index. Dollar index had a pullback from the levels we first thought around this 80-50 area, and we are still bullish on this market. It's plus 85. The triangles are still 2 triangles out of 3 green, very strong trend. This is a pullback in my opinion, and we'll see this market resume its upward trend. So let's see how that plays out today. Now we do have the euro dollar, which had a big move on the upside today. A lot of people caught short this market. It's very quiet overnight. You can see how this market just had several quiet days. Boom, back over 31. It's under 31 now. It's 130.87. This is real time. And you can see the market that was very heavily oversold is starting to come out of that. Not out of the woods yet in this market by a long shot, but certainly it's not as bearish as it once was. Minus 85 is a longer-term negative signal, and perhaps we'll get some resistance coming in between the 31.50 and 32 level, which are the previous lows we have seen right here. Oops, the previous lows we've seen right here, and the previous lows we've seen right here. So I think that's going to be the area probably where the market's going to have resistance on the upside. Still not out of the woods in Europe yet by a long shot. So unfortunately, we sort of go from hope to greed to fear, you name it, in Europe. It's just very, very emotional this time of year there. Looking at the Reuters Jefferies CRB Commodity Index, which is our next market, it's minus 75. It's an emerging trend. It has been bearish. It's been a minus 100 just yesterday, as a matter of fact. And now we've got this area where, boom, short covering. Lots has to do with the crude oil, of course, and some of the other commodity markets. But this area here, we talked about this before. The 292 level is a 61.8 Fibonacci retracement. This is going to be a very key level, in my opinion, as we believe inflation is going to kick in, and we're going to see this market go much higher. I think just give this market some room for the time being. I think you've got time to get in it and watch it in the early part of 2012. Now, we are also going to be talking about the big movers today. The big movers, Juniper Networks. And Juniper Networks is minus 75, so we know it's a negative trend. So you've got the monthly and the weekly. So even though the big trend is up here, at least it's saying to you it's not going to last. And I think I have to go along with that. It's going much like it looked like a moving out here, boom. Moving out here, boom. So I think this is going to be another one of those. Looks like it's moving up, reversing higher, going higher, boom, comes down. So I wouldn't get too excited about this being a bottom in the market. I think you've got lots of time. The good thing about the markets, if they're going to have a good move, a prolonged move, which is what you want to make really good profits in the market, you don't have to get in at the very last, the bottom, the last low tick. It just doesn't work that way. You want to wait until the market has a defined trend reversal and change. And so far, we haven't seen that in this market. Still looking negative to us. No reason to jump in despite today's big up move. The next market we're going to look at is Pulte. We looked at that earlier. We're going to look at Red Hat. Red Hat didn't do quite as well, and you can see why we say that with Red Hat. It's minus 70, possible emerging trend. It's down 8.77%, which is a chunk in these markets. And you can see this on the chart as we go there. Look at this market right now. And you are really under pressure today. You've got the potential double top, the pivot point. You could also potentially say this is a head and shoulders top. Let's put our telestrator in to show you this. And this could be really bad news for Red Hat. So let's just do a little analysis here. If we simply draw a line, I'm just going to freehand this like this. We could argue that this is a potential head and shoulders. It's certainly a top for sure. And we could argue from the 45 area. This low right here is 45, and the high right here we're going to call that 53. So 45 from 53 is 8. Subtract 8 from 45. That takes you down to 37, which is right here. And that would have to be the target zone right now for Red Hat. Does not look good. And I think if we're right in this market, it shouldn't really go over this move right here. Now remember, this is the silly season. You do have the longer-term monthly trend still positive. However, if we get down to 37, I think you're going to be hard-pressed to make that argument it's still positive. But nonetheless, you've got the top in place, the pullback. It's not looking good for Red Hat, and I think we'll see this market under more pressure. But let's just clear this for a second. I want to just show you a couple of other things on Red Hat. If we go down here, it is oversold, and also the MACD is down. So you do have some room on the downside. I would watch it very, very carefully today. And by the weekend, this may be still under pressure, this market. So let's see how that plays out. Now, we're also going to be looking at 3 ETFs we think you should be looking at. One is the USO, which is crude oil. The next one is GLD, which is gold. I think gold is going to be very, very interesting in 2012. And the other one is SPY, which is the S&P 500. Now, you can see all of these markets, 55 for the USO, which is a trading range, 75, which is a emerging downtrend for the gold market. It has not there yet. And 70 for the Standard & Poor's 500 ETF. Emerging trends, trading range. So watch these markets as we go into 2012. It's going to be very, very interesting to see how that happens. And if you start 2012, we'd love to have you join us in Salt Lake City. We have our MarketClub's first in MarketClub Investor Summit. You can call us toll-free at this number if you'd like to find out more about the summit. It's 1-877-219-1482, extension 10234. And if you're international and watching this video, you can call 801-341-3981, extension 10234. We'd love to have you join us. There's more information on our website about this summit, and hope to see you there. I'll be there talking about the markets, of course, and showing you some of the things we're looking for in 2012. Hey, this is Adam Hewison. Thanks for stopping by. Just remember, tomorrow is our MarketClub TV Christmas show. It starts at 5 o'clock. It'll be 1 hour Eastern Standard Time. We'd love to have you watch that. We'll be taking your questions and looking at the markets in more detail.